we're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Good morning. You're watching Daybreak on Bloomberg Quint Live, and I'm Alex Matthew. Here are the headlines this Monday morning. No respite for Asian equities this Monday, with all major markets heading lower after posting their worst performance in nearly 2 weeks last week. U.S. Treasury Secretary Steven Mnuchin says the U.S. is hopeful of drawing up a new bilateral trade deal with China after South Korea renegotiated a 6-year bilateral trade pact. Reliance Industries enters into the digital music space by buying stake in Savan for 676 crore rupees and will invest another 130 crore rupees to expand the company's presence. And Blackstone has picked up a 50% stake in Indiabulls Real Estate's Central Mumbai properties for 4,750 crore rupees. Turning to the international markets now, the US stocks fell sharply on Friday, adding to their steep weekly losses as investors assess the possibility of a trade war brewing between the US and China. The major averages posted their worst weekly performance since January 2016. Bloomberg's Abigail Doolittle wraps up all the action on Wall Street in this report.
Friday's Wall Street session ended with another big sell-off for stocks, with the Dow, S&P 500, and the Nasdaq all shedding nearly 2% or more. This resulted in the biggest weekly declines for the major averages since January of 2016. Now, that's important because it means this week was more bearish, worse than either of the two big down weeks back in February. In turn, that tells us the sellers are really trying to take control of all of the near-term volatility and whipsaws. As for the linchpin to this week's selling action, that goes back to Facebook when investors reacted bearishly on Monday to its data crisis, plus the possibility of fines ahead for the company and regulation. Those shares finished down on the week by about 14%, nearly 14%, its worst week since July of 2012. Now, fears of regulation caused some of the other big tech and internet names to tumble as well, including Alphabet, Amazon, and Netflix. But it was Apple, on other reason, in fact, no particular reason, which really makes this stand out, that was the biggest drag on the overall tech sector this past week, down about 7%. The fact that there wasn't a fundamental change or a reason for the selling action may point to profit-taking ahead of the upcoming earnings season. And on the threat of a trade war, that is definitely a macro backdrop that was bearish for stocks. Industrials were down, including Boeing, Caterpillar, 3M, and many others. Confirming the sell-off this past week as a period of true risk-off was the fact that Haven bonds, the yen, and gold all rallied, investors seeking that safety, plus the VIX, a quote-unquote fear index, shot higher to about 25. So with the big sell-off for stocks, it was absolutely a risk-off week for the financial markets in the U.S. From New York, Abigail Doolittle, Bloomberg News.
Well, the U.S. has reworked its bilateral trade pact with South Korea. This comes a week after the U.S. imposed higher tariff on steel and aluminium imports into the country. U.S. Treasury Secretary Steve Mnuchin has said that the next move will be to get China to agree to a new pact. Here's Bloomberg News' Tom McKinsey with a detailed report.
Interesting times for these Western executives to be here in China. This is a forum where they get to meet policymakers and to try to get a feel for the direction of travel here and how China's lawmakers are making their decisions on a whole range of issues. But of course, the trade tensions are dominating the discussions here, as you said, and very much the view that we've been getting from the executives and the academics that we've been speaking to is there is a growing sense of concern, of course, about the trajectory of the US-China ties, but also a need for the corporates here to understand the implications of these tariffs being imposed by the Trump administration, exactly which sectors and which products they're going to be targeting so that they can better position themselves for the potential acceleration in response from China. And that's something else that people have been commenting on here, is the fact that the response from China has been relatively measured and strategic, though there are warnings from the people we've been speaking to here that have access in the ears of the Chinese policymakers that those measures could be stepped up if the Trump administration continues to pressure.
Well, that's a word on the ongoing discussions between the two countries. We'll have to watch how that pans out over the course of the next couple of weeks. But for now, let's take a look at the Asian markets. And clearly, the worry of that trade war is looming large, with all the Asian markets actually heading lower. The Nikkei in Japan down as much as 1.1% as of now. Let's turn to India now. And Darshan Mehta is here to set us up for the day's trade. Morning, Darshan. Not the best cues from the overseas equity markets.
It isn't, because most of the Asian markets are down, US was down, and the SCX Nifty, though has recovered from the lows of the day, still is indicating a negative outlook. So we closed below the 10,000 mark, and probably the opening will again be below the 10,000 mark in trade today. Now, how did the ADRs pan out in trade? Most of them had negative views. So Vedanta cracked 4%, Tata Motors, ICICI down 2%, Dr. Reddy was down 1.5% in trade. So extremely weak close that was there. Infosys and Wipro were the two ADRs, especially from the IT space, which managed to hold on onto trade. Now, crude has been doing well. It was up almost 2.5% on Friday, continues with its move upwards. So it's up almost 0.3% in trade currently. Brent is about the $670 barrel per mark, and WTI is about the $66 barrel per mark. Now, how did the base metals end on LME? And it was a weak closing by most base metals on the LME, because if you're looking at it, aluminium was down over 1%, nickel was down over 1%, lead was down over 1%. Only exception was zinc, which managed to hold on. But the trade in China is currently indicating negative views. So copper is down 1.5%, zinc is down 0.5%, aluminium is down 0.5%, and steel is down almost 3%. Rubber was down almost 6% the last time I checked. So Qs are extremely weak, and there seems to be a little bit of activity as far as the precious metals are concerned. Now, how are the fund flows spaced out at this point of time? FI has bought in almost 1,600 crores in the cash market. DI has sold in another 935 crores in the cash market. Now, how did the sectors pan out in trade? The mid caps was down almost 1.5%. The small caps are selling of 2%, and the Nifty banks are selling of another 2% in trade. The other sectors was the real estate and metal index, which saw heavy selling. The real estate sector was down 3%. The metals counter was down over 2%. Wix managed to inch up since the market was rather volatile. It's up about the 15.5 level. Now, the Nifty was down 116 points. Basically, Reliance, HDFC Bank, ICICI and L&T were the prime contributors for the Nifty falling in almost 117 points on Friday.
All right, so we've had, like you said, volatile trade on Friday. How are we looking in terms of the F&O Qs?
Yeah, so it looks extremely weak. It's expiry week. So as far as the Nifty is concerned, we saw fresh short long unwinding that was seen on the counter. So below the 10,000 mark in trade, so just 2 points, but nevertheless the closing was extremely weak. Now, how did the bank Nifty pan out in trade? And that one also saw long unwinding that came in. Open interest was down 5%, and longs were getting unwound on the Nifty bank also. Now, where are positions being taken? We've seen that, at this point of time, put writers are still active at the 1,000 level. They believe that, they will be able to hold on and move above the 1,000 level mark. And call writers are getting aggressive from 10,000 right up to levels of 10,300. So 10,000 remains the most crucial mark. What happened on Friday was the fact that, put writers became aggressive at 10,000 level, call writers, and put writers were seen shedding positions from levels of 10,000. Now they're building positions on the 9,900 mark in trade. So 10,000 is extremely crucial now. Now, PCR was flat for the Nifty, but fell in much higher for the Nifty bank, which was down almost from 1.15 to 0.94. Individually, some of the counters, OBC is the stock in the F&O ban. Is the new stock in the F&O ban. The other stocks in focus is JSPL, JP Associates, and Reliance Communication. These three stocks come out of the F&O ban. Now, individually, some of the counters in focus, IGL saw long unwinding. Open interest was down almost 4% on the counter. Sales saw open interest was flat, but the counter was down almost 7% in trade. And Dewan Housing Finance saw open interest decline of almost 11% on the short side. The other counter in focus is Jet Airways. Again, a severe amount of long unwinding was seen on the counter.
Thanks, Darshan, for that snapshot of what to expect today, both in the F&O space and with regard to the trade setup. But here's a quick check on the rupee in the bond market. The rupee made an impressive recovery on Friday and ended higher at 65.01 against the US dollar. This was largely on account of global weakness of the greenback as worries of a trade war continue to loom. Sovereign bonds gained for a third day as traders bet on shorter debt. The bond yield fell for a third session to hit a 5-week low ahead of the release of the April-September bond auction calendar. This week, watch out for the release of fiscal deficit data for the month of February. Let's shift focus now to the commodity space, and Jayesh Khilnani joins in with all the details there. Morning, Jayesh.
Morning, Alex. Let me start off with oil prices, which actually are seeing a positive bias after, handsome gains on Friday. So WTI on Friday was up more than 2%, while Brent was also up nearly 2%. In fact, for the week, Brent surged more than 6%, and WTI posted its biggest weekly gain since the month of July. Now, all of this was on the back of John Bolton being, appointed as the National Security Advisor. So the oil markets actually surged on account of that. As far as the base metals were concerned, most of the base metals declined on London Metal Exchange except for zinc, which ended up about 0.4%. Now, the index itself posted its fifth straight weekly loss, largely due to the trade war concerns that have escalated. As far as other individual base metals are concerned, we had aluminium, nickel, and lead, which declined more than 1% each, and copper and tin actually closed marginally lower. Shifting focus to the precious metal space, gold prices have seen some bit of uptick. In fact, COMEX gold has now inched above the 1350 mark. Now, this is on the back of demand on escalating economic and geopolitical tensions around the globe.
Thanks for that, Jayesh. Now, it looks like Mukesh Ambani has big plans for his media empire. Just over a month after announcing the Eros International deal, Reliance Industries now plans to buy more than 40% stake in Savan, which is the music streaming app. Sumit Sarkar is here with all the contours of that deal. It's looking very good for the media streaming business of Reliance.
Yeah, it is. So there are two parts to this deal. In the first part, Reliance Industries will be putting in close to 806 crore rupees, that is $124 million, for 41.1% stake in Savan. Now, how will they get this 41.1% stake? Well, some of it they'll get from the existing promoters which are looking to sell their stake and of Savan India, which includes Tiger Global Management, Liberty Media, Bertelsmann and others, for 676 crore rupees. Now, other than that, they'll also put in 130 crore rupees in the entity which will be used by the company for growth and expansion of this music content that the company has. So in total, they'll invest 806 crore rupees, 41.1% stake. Now, in the second part of the deal, Reliance Industries will merge its own music content, that is Jio Music, with Savan India, thereby creating an entity worth $1 billion. And in this entity, Reliance Industries will hold close to 81.7% stake. Now, this $1 billion valuation is given by Reliance Industries based on the valuation at what they are investing in Savan India. And in this $1 billion, Jio Music will be valued close to $670 million, while Savan India will be valued at $330 million, that is, which brings the combined valuation of this entity at close to 6,500 crore rupees. Now, Reliance Industries is expecting this deal to complete by June 30, 2018, and in future they have also promised to invest another 520 crore rupees or $80 million in the combined entity. Now, why this investment? Well, after creating a data abundance environment in the telecom industry at cheaper rate, it is now creating platform for its users to use this data. Along with that, this investment will also strengthen Reliance Industries' digital content and entertainment offering. Now, after investing in Balaji Telefilms, which has show content, the company invested in Eros, which has movie content, and now it has invested in Savan, which has music content. Now, it has around 36 million music songs in 15 languages and 900 plus label partnerships, which is accessed across the globe. Now, this is Reliance Industries and their affiliates' fourth investment in the media sector, and the second one in 2018. In 2014, they invested in Network 18. Last year, they invested in Balaji Telefilms. 1 month back, they bought stake in Eros International, and now it's Savan India. So what are analysts saying about this? Well, JP Morgan is saying that JP Morgan is expecting Reliance Industries spending on content to continue in future, and it also says that content monetization is a key variable for long-term monetization of its large investments in the telecom business.
Thanks so much for that, Sumit. Let's move on now to the stock of the day. Nikki Mirchandani has the stock to tell you about. Nikki, what do you have for us?
Hi Alex, Tata Power has signed a pact to sell around good 40% stake in Pantone for a sum of around 15,400 42.6 crore to its parent Tata Son. It's also going to be divesting a good 4.7% stake in Tata Communication for 613.4 crore. This is in line with company's focus to divest non-core assets. Currently, consolidated net debt to equity stands at 2.9 times, which is substantially higher. If you look at the non-project debt development, debt to UMPP is around 10,000 and that of fund Wellspun is around 4,459. If you see at what Morgan Stanley has to say on this, it has maintained an overweight rating with a target price around 94 with a transaction value which translates to around rupees 8 per share. This is against the base case valuation of rupees 6, and the company says that it's waiting some sort of clarity on potential long-term capital gains tax on this transaction. Back to you.
Thanks so much for that, Nikki. Moving on to a big update in the real estate space, Indiabulls Real Estate will sell 50% stake in some of its assets to Blackstone Group. The deal that includes prime commercial properties in Mumbai is valued at $1,461 million. That translates to around 9,500 crore rupees. Jayesh Khilnani is here with the contours of the deal. Morning, Jayesh.
Morning, Alex. So this is long-standing. The result has actually come in. Let's have a look at actually what they are offering or what the deal is. So they are going to divest 50% stake in Indiabulls Properties Private Limited as well as Indiabulls Real Estate Company Private Limited for about $1,461 million, which is also translated into $9,500 odd dollars. That's the 50% stake in both the companies. Now, they have not individually or specifically mentioned which properties both of these companies actually own. Largely the rental property also. The size I was mentioning to you, that is about 9,500 odd crores. If we go on to, what this translated into numbers, what we can also see is that, it is valued at the deal is valued at an enterprise value of about 9,500 crores. Now, if you look at Indiabulls Real Estate, the enterprise value of that stands close to about 17,000 crores, and the market cap is about 9,100 odd crores. Let's look at where Indiabulls Real Estate is likely to use the proceeds from. One is that they are going to repay the existing debt of the company and some of the subsidiaries, and also achieve their long-term growth or business plan. So they are going to support the business as well as long-term growth from the proceeds that they get. Now, let's break it up into what kind of properties do they have. So, the debt that is there in the rental properties as of the December quarter, that stood at about 4,200 odd crores, while the total debt stands just above 9,100 crores. Let's have a look at some of the other things that how the actual company will look like once the deal is done. So what will happen is Indiabulls Real Estate, you have this, it'll have 50% stake in IPIT, while Blackstone will own the other 50% in IPIT. What they are also saying is that all the other assets which are not included in those two companies, those will be retained by Indiabulls Real Estate. So 100% stake over there as well. So some of the details of these companies, what they say is that IPIT, all the properties located at Lower Parel or the Chennai facility. So what they have actually is the two towers that we have, one Indiabulls Center and Indiabulls Finance, that has about 3.3 million square feet which can be leased or that is completed project. Additionally, what they have is another 0.8 million square feet which is still under construction. So that's the rental property that they have. Now, the residential side, what do they have is completed about 0.4 million square feet, which is largely, Mumbai and central Mumbai. And they have under construction of about 1.6 million square feet. Now, if you can see the other last bit that we have, the other assets, what they have is, some of the leased office space that is there. So this is, largely out of Mumbai. The completed projects is about 1.9 million square feet. What they have additionally planned is about 2.4 million square feet. And the new acquisitions, what that they have done is 0.75 million square feet. As far as the residential properties are concerned, they have ongoing of about 32.5 million square feet, while they have a land bank of about, more than 1,000 acres.
Thanks, Jayesh. Moving on now, the momentum in the primary markets continues with Lemon Tree Hotels being the latest to tap the markets. The mid-price segment hotel chain comes out with its 1,040 crore IPO today. Nikki Mirchandani has everything that you need to know about that offer. Nikki, what do you have for us?
Sure, Alex. To begin with, it's a 1,040 crore IPO that we're looking at with a price band of 54 to 56. Promoter through this will be divesting around 24% of their stake. The market capitalization is around 4,400. Just to give you a rundown of what Lemon Tree exactly is. It's the country's largest hotel chain, especially in the mid-price segment, and the third largest overall. It has around 4,697 rooms in 45 hotels spread across 28 cities, out of which 19 are owned, 3 are owned and located on leased or licensed land, and 5 are just leased, 18 are managed. Well, the company operates under 3 segments. To begin with, the first segment is the upper middle scale segment, which is also known as the premier segment, where at least a good 28% of the rooms have been allocated. Well, in the second segment, which is the middle scale segment, there around 49% of the rooms have been allocated. And last, you have the economy hotels, which is termed under the term as the red fox segment, where 23% of the rooms have been allocated. Now, if you look at the revenue breakup, you would see 63% of the revenue actually coming in from the own hotel segment, which implies that it could be a higher share of own hotels, only means that it has higher capex requirements. In terms of the financials, if you look at, that's the revenue per or EBITDA and the network, they have been growing at a good 18, 33 and 5%. In terms of the bottom line performance of the company has just turned around for the 9-month ended FY18 from a loss-making entity that was seen since FY13. If you look at the debt to equity ratio, well, it is sitting at a debt of 0.79 times, at least for the 9-month ended FY18, from FY13 debt of around 0.44 times. Also, do remember the fact that the company is also expected to add another 400 crore of debt to fund its expansion. In terms of the revenue share, if you look at that picture, you have the 3-star average, 4-star average, and the growth coming in at good 40% from both of these segments. In terms of valuation there, in terms of EV to EBITDA, stands quite high at 46 times as compared to the EV to EBITDA of Indian Hotel EIH and Royal Orchid. Brokerages, however, suggest that it could be an avoid. This is what ICICI Direct has to say. And in terms of angel broking, that suggests a neutral rating for this counter.
Thanks, Nikki, for that. Turning to the stocks in news, Shraddha Babla has an entire list to tell you about. Morning, Shraddha.
Good morning, Alex. So starting off with Sandur Manganese, where they have said that the enhancement in manganese ore annual production in the mining lease from 7,400 to 32,000 tons has been approved by an empowered committee. Now, according to Times of India, the merger of State Trading Corp, that is STC, and MMTC is on the cards, and that is something that was said by Suresh Prabhu. Then you also have Fortis Healthcare, which should be in focus. Now, this is on the back of an ET report which says that the Manipal Hospital TPG Consortium is considering a 2-step deal for Fortis because so some sort of a new structure is being proposed because probes into Fortis are taking longer than expected. So Fortis Healthcare, they're considering hiving off the hospital's portfolio into a separate listed entity, which will then be merged with the acquirer. And besides, the consortium will also be taking over SRL diagnostics units, so watch out for Fortis. You also have another ET report which says that Systema has emerged as the highest bidder for the rest of Reliance Communications, which means that the undersea cables, enterprise unit and data centers, the bidding for that Systema has emerged as the highest bidder, and the bid value was at $1.5 billion. And this will, of course, mark Anil Ambani's complete exit from telecom. Then you have Bharat Financial, which has said that they've completed direct assignment deals worth 1391 crores. You have NHPC, which has commissioned 50 megawatts of solar project in Tamil Nadu. And lastly, Lumax Auto Technologies, which has approved a stock split in the ratio of 1:5. So watch out for some of these names.
Thanks, Shraddha. Somit Sarkar is back with the big brokerage scores of the day. Somit, over to you.
On the big brokerage calls for the day, first we have a CLSA on Cadila Healthcare. Now the brokerage has upgraded the stock to buy from underperform and has raised the target price to 450 from 440. Now according to the brokerage, improving India outlook and strong US pipeline will drive earnings for the company. The brokerage is expecting improvement in new launches in the US market in 2018. Now Cadila expects to launch nearly 40 products in 2018 in US and it has over 100 pending approvals. Also biosimilars, vaccines and novel research products are long-term growth drivers according to the brokerage. Now, Cadila has a pipeline of 18 biosimilar, 19 vaccines and 3 novel research products. The brokerage is also expecting Cadila's to look for more product deals in specialty space from the cash flows that the company will get in financial year 2018. Lastly, it expects the company's earnings to grow at a compounded annual growth rate of 16% over FY18 to FY20. Second, we have a Citi on Coffee Day Enterprises. Now, the brokerage has maintained its buy rating on the stock but has raised the target price to 350 from 285. Now, according to the brokerage, the coffee business of the company is stable and going forward growth will be boosted by the strong export numbers. Now, along with this, commercialization of its key unit should also aid profit growth from the second half of financial year 2019. Also, stake sales in any allied business would aid cash flows of the company and address the debt concerns. Lastly, it says that it has raised the target price as they roll forward the coffee business valuations and account for the changes in the market cap and the list for the listed companies.
Thanks, Sumit. Now, there's clearly lots to talk about with the Asian markets still trading a negative. We'll have to see how the Indian markets open, and that's just a short while from now. But in the meanwhile, you can check out a few stories on the website bloombergquint.com. First up, Punjab National Bank plans to take part in the bankruptcy proceeding of Firestar Diamond, which is a group company of jewelry designer Nirav Modi, who is one of the accused in the 12,700 crore fraud at the public sector lender. The Securities and Exchange Board of India plans to increase the maximum investment by angel funds in venture capital undertakings to 10 crore rupees from the current 5 crore. This is an attempt to bolster the startup ecosystem in the country. And Indian firms have raised over 58,000 crore rupees through qualified institutional placements of shares between April and January. That's a 12-fold increase from the same period a year ago. Well, that's all we have for you in this edition of Daybreak, but all you need to know is up next, so do stay tuned. Thanks for watching. This is Bloomberg Quint.